everybody, welcome back to the LAGFX channel. We have a brand new Sunday sessions for you. Yes, you've probably noticed it. I have moved the camera overlay to the other side of the screen, that way, just because it was interfering with some of the pop-ups in editing and whatnot. So I'm in the bottom left now, but anyway, that's enough waffle. Let's actually go into some detail. So starting off, as always, you probably guessed it, Euro USD market. I pretty much just rinsed this market. Don't really look at any of the others. I usually would. But the only one I really check is dollar yen, and anybody who's been checking that recently, it's within a strange condition where it's not providing plentiful opportunities. It's more a case of like maybe it'll provide, for me at least, 1-2 opportunities every single week, and if you miss them, then you've missed them pretty much. And typically it's happening outside of the hours that I trade, so it is what it is. It just means I'm sticking with this market mainly and trading it with what it provides me with. Thankfully, it has been providing us with plenty, and I mean plenty, of trading opportunities in the last week. So starting off, the week started about here. Okay, so we had a very refined zone in this region that I believed was going to get mitigated on market open from this move. That didn't happen. Price then began to take off. My assumption was that it's going to make this bullish run. After tapping this, it's going to make that bullish run to come and take this liquidity high and give us a new higher high in the market. As we traded up, you see that I had this demand zone identified. In my eyes, what was going to happen here is that we were going to come down, mitigate the demand zone, and then make that move higher. Of course, it's never as simple as that in the Forex markets. We did find an intermediary sell position, which ran 6.67 RR. So a nice little return there. Pretty much just seeing a break of structural reversal from this swing high and expecting that price was going to trade down into this zone. We traded down, we had some consolidation. However, we ended up falling all the way back through to this zone we were watching at the very start of the week. So a couple of days later, we finally traded into that. We had a tap, a reversal, and then price literally just took off, taking both liquidity highs, creating a new swing high in the market, giving us our new trading parameters, which would be this as a protected low. This is our final target. So we are currently trading within that. What I was looking for inside of this is I had a very refined zone once again, whilst also having the overall sell to buy as a unrefined zone. We see we didn't get the refined zone tap. However, we did get price traders into the unrefined zone where we saw an accumulation of price. We take off higher. We have a tap back down into, again, a last sell to buy candle, an unmitigated demand zone. And you see I have many cyan boxes, which are my demand zones. As price takes off, many unmitigated positions that price reacted to. So all of these would have classed as buying opportunities, given we had entry confirmation, or however we may want to tackle that on the tap. Had plenty of opportunities there. As of right now, I don't know why the zone's not on there, but for some time now, I have been waiting for price to trade back up and potentially see something happen to this zone. Obviously, looking longer term, we are trading bullish. So what's going to happen here is that, yes, the higher time frame bias is the fact that, okay, this is a protected low. This is the final target. This is going to be the start of our next leg higher. However, just viewing the supply and demand analysis within this region, it seems as if we're having to keep introducing a lot of demand to make this move happen. You see, evident by all of these pullbacks and all of the mitigations of these zones. Now, it's great because it means that we have plenty of opportunities to try and get in long, which of course is amazing. But on the flip side, it means that, well, there's not actually a lot of prevailing demand left over in the market. We keep having to have these pullbacks to introduce enough to cause the move that we want to see happen. And therefore, as we trade into this last buy to sell for a supply zone, we may just introduce enough supply to actually flip that supply and demand balance back into supply's favor. So I'm just having a look at this. I mean, we are late night Friday, 8:55 p.m. on Friday. So obviously I'm not going to be placing any trades because the market's close in just over an hour. Looking inside of this, I saw the tap into this. We had some liquidity build up, the liquidation. Straight after the liquidation, we had high volume, high volatility to the downside, which caused a displacement. Traded back up to create a swing high, a break of structure. This fractally becomes a protected high. Looking inside of this as an impulsive wave, this was a supply zone that I identified, I believe on the 15-second. We have a nice buy candle. That's the one. Now what's happened within this buy candle is it just comes past the low and then taps us back in. So that to me is a mitigation of the entire area. Other than this, we have some inefficiency below. We see price trading back up, building some liquidity in the area, having signs that it does now want to trade lower again after that displacement. That is pretty much just a bear trap. We then have price trade back up and early signs of what could be a distribution. It may be a reaccumulation. As we're seeing now live, it may liquidate this zone, but that was looking quite nice as we see a buying climax, secondary test in B, up thrust. But what we would have needed is for the protected low to get broken before any sell position would have been confirmed. So we would need a displacement of this. That obviously wasn't delivered. So if it liquidates this zone, I'm not surprised at all because we didn't displace. We didn't give ourselves any signs that price was wanting to trade lower. So absolutely fine. We wouldn't have even got involved on that position at all. So no displacement delivered there. The market obviously is going to close in an hour. We may see something. Usually it's very flat within the last couple hours. However, I'm going to be watching this zone to sell from and looking at this with the scenario of the case that price is either going to trade up to here, we're going to reverse, we're going to then be able to find sells in this coming week, in this coming trading week. We're probably going to start looking to liquidate all of these lows because every single low in this region is acting as liquidity. So if I grab my brush tool and just draw out exactly what I mean, each one of these lows remains unliquidated, if that's a word, unliquidated. And therefore, if we trade back up, we literally have all of this liquidity we can come and take out with a move lower. That move lower, by all means, could even come to tap us in to this refined zone, which still hasn't been mitigated. So I know a lot of it is back and forth, like I want to see price do this, then that. That's very much how it is within this strategy. We are constantly looking at unmitigated orders in the market. It doesn't mean price is going to reverse or react to every single unmitigated order. It just means that we are going to keep an eye on that because we understand that when it mitigates that order, as you should see in the next Learn to Trade video that's coming out on Wednesday, very nice analogy as to why this happens. But as we tap into a zone, what we are doing is we are removing supply or demand and introducing supply or demand. So, for example, in a supply zone, we are removing demand from the market whilst also introducing more supply, and therefore we add a bit more to the supply and demand balance tilt in supply's favor. So what that can mean is that every unmitigated zone is relevant, but it'll only cause a mass reversal if we manage to tip the scales enough in one's favor to cause that move. So what we will see quite typically with some zones, as we do in this one, for a great example, is we do tap into it, we do have a reversal, fractal displacement, and signs that we are moving up. The reason that has happened is because we tapped into this zone, we have introduced demand. There's been enough demand to just cause a slight reversal and a push back up, but evidently there wasn't quite enough demand to cause that entire move back up. Thankfully, we had a zone lower, which managed to do that for us instead. So each of these zones I'm talking about, if they get liquidated, that doesn't mean they weren't valid or they didn't actually class as an unmitigated order. It just means that they didn't introduce enough supply or demand to cause the move that we desired. So just a final recap, what I'm looking at is for price to potentially trade us back into here, see a reversal and move lower, and then liquidation of all of these lows. Price may then quite rightly come down, tap this demand zone before taking the next move up, or liquidate this demand zone, in which case fairly nice confirmation that we're probably going to go bearish for some time. So if that happens, probably looking to go bearish for the entire week. On the flip side, we may see price just blow through this zone, in which case start running higher, and we can continue looking for demand zones in order to trade price up to the final target. Now, this is why we have to be very versatile and liquid within the markets, because the bias, especially on a market like Euro USD, which has so much liquidity pumped through it, and when it's in these phases where it's somewhat ranged, but sort of following a trend at the same time. We have to be ready to look at both sides. We have to be ready to change and adapt our bias to the price action that we are being delivered at that current moment. We can't just stick with one bias like, okay, I'm just going to wait until this zone taps and go long. No, because the bias is constantly changing in the institution's eyes, so we have to be liquid and versatile like they are to look to tackle the market in any way we can. That is exactly what you're seeing throughout all of this analysis. Is we can constantly be looking for buys and sells within this region. Yes, the trend is your friend, and we do ideally want to trade with the trend, but it all depends what time frame you're looking on. If we were to look at this region alone on the fractal time frame, we'd have this as a bearish impulse, correctional wave, bearish impulse. We're going to follow and reverse from this supply zone to continue the fractal bearishness. So technically, me looking at that demand zone is following and trading the trend. Of course, as we zoom out and we look inside of higher time frame structure, we would see, yes, we are bullish, but it comes back to the bias that where are we actually bearish to? Was this bearishness just to bring price down to this zone before we accumulate, or do we need to continue bearishness because we want to mitigate and remove this order from the market? Again, I've given so many scenarios there, but it just shows how versatile and liquid my bias is and how ready I am to tackle the market no matter what it delivers us. So if you do have any questions about that, I know it can be confusing when I'm giving different biases back and forth. Do not hesitate to message me on Telegram or any other form of social media. If not, just leave it in the comments. We always check them. We always get back to you. But with that being said, I'm going to pass you over to Luke, who will go through a few markets of his own. Apologies, as I said at the start, it's only Euro US dollar I'm looking at the moment because that is all I'm trading. I don't like the look of any other market, so I'm not going to try and provide you with analysis I'm not confident with and force it on a market for the sake of content. That is not who I am or who we are at LAGFX. So done my best to run down this market. Hopefully you can take something away and be profitable in the next week. So best of luck, everybody, and I'll see you next week.
How are you getting on, people? I hope you're all okay. I hope you enjoyed the analysis that James has provided for you there. I think he's gone over some brilliant points, and it'll be nice to see how the markets play out next week. What I'm going to do is go over 3 pairs that I am looking to capitalise on come Monday. Give you my bias. It's going to be quite brief. I'm going to quickly go over my overall bias and ways that I want to look to tackle it. And then I'm going to go into a bit more depth with the USD CAD pair and show you how I will look to go about finding zones and trading the market lower. So the first pair we're going to go over today is the euro to the Japanese yen. As we can see on screen here, we have our bullish impulse. We then have a break of structure to the downside, and we have since seen some bearish momentum. Now, I obviously want to capitalize on a sell position within this market. As we can see, the market is now trading lower down, as we've seen from this break of structure. So we want to be active sellers within this market. The overall structure of the market is biased to a sell as well. So as always, we want to trade with the trend and not against it. The trend is our friend, so we are looking for those sell positions. Now, this is some analysis that I put out to the Learning Lounge group chat, so if you're not in there, get involved. Link is always in the description, and as I say, we post our analysis all the time in there, so if you want to get involved in what we are seeing and how we are trading during the week, that is the perfect place to be. Nevertheless, as we can see, I've highlighted a zone. This is where I want to see price eventually trail up to before taking a full-on reversal. So we managed to capitalize on a short long position just the other day, which was brilliant, and then we have since seen a price trade lower and then take us up higher, now breaking that high that was created and also creating higher lows along the way. This is obviously good signs for our analysis, as we want to see price trail up and then take us lower. So what can we do, and how can we get involved? Well, we can again look to get involved in those buy before the longer term sell positions, or we can just sit on our hands and wait for price to tap into our POI, and then as soon as we have the right confirmation, we can look to trade this market lower. Now, just looking here on the 30-minute, we can see this clear bullish structure along with this this retracement. We have a low, a higher low, another higher low. So we can basically look for its next impulse to take place, which it looks as though it's taken now. As soon as we have that pullback, evidence that that pullback has finished and the next impulse is underway, we can look to get in on that buy, hold that till this area, and then trade it lower. So my overall bias is to be a seller in this market, but we could look for shorter term buy positions, and we can look to do that come the week start on Monday. Now moving over to the USD CAD pair. As we can see here, I have drawn out the structure of this market just to kind of make it a bit easier for you to see. But as we can see here, we have clear bullishness, we have a low set, a high set, a higher low, and then a higher high. As we can see, it's very much higher than the previous one. This is great. This brings a lot of volume into this area of consolidation or distribution, as some would call it. Now, as we can see here, we have a high set, we then have a higher low set. This is brilliant. Then what happens is we see a lower high get created. So this is evidence, or this is our first bit of data that suggests that price could now be looking to reverse, because as you can see, this lower high is actually confirmed with a lower low. Price comes down to actually break the previous higher low. So this does in fact confirm bearishness on the higher time frames. So I will now be looking to be a seller in this market longer term, as this whole entire structure has been displaced in price. So we are going to be looking to be sellers longer term. Now, how can we look to get involved again in this market? Well, we want to find areas at which price is looking to retrace to. As you can see at the moment, price is bullish. This is part of its retracement phase. As we know, with every impulse comes a retracement, some kind of correctional wave in order to continue pushing the price in the prevailed direction, whether that be bearish or bullish. So it's obviously at the moment trying to find enough supply to push that price lower, breaking this lower low that has just been created. So here, looking at this impulsive wave that took us down, breaking the previous higher low, we want to find areas that have maybe been left unmitigated, any areas that have, there's any inefficiency within the market, and we can look to see some kind of reversal take place within these points. Alternatively, we can go to one of my favorite routes, which is using the Fibonacci retracement tool. This gives us an instant answer of potential reversal points. So as we can see here, we mark the start and end of the impulse. This then gives us 3 parameters that we could look at and a range in where price could go. So if we highlight this, so we want to highlight all the golden ratios. We have the 38.2, the 50 and the 61.8. So we know that any point around here, price could look to trail into, show some signs of a distribution, some signs of a break of structure to the downside, and then we can look to get involved on those short positions longer term. Again, going back to my first point, we could find areas that have been left unmitigated or any inefficiency in market price. So straight away, I can see some here. So we've had a bullish move followed by a strong bearish move down without price coming back up to clear that. So this is my first point that I'd be looking out for here. Again, if we continue looking through, is there anywhere else that price has come and not cleared? To be honest with you, I can't see anywhere else. So this would be my only area that I would look to maybe trade from. That is, looking at the day time frame. Does it coincide with our Fibonacci? Not quite, but they don't always coincide with one another. If they were to coincide with each other, that would obviously be brilliant. That would build our bias even more so for that designated area. With that being said, how can we look to trade this market come the start of this week? Well, if we just go back to how price has played out so far, as we can see, price is trailing back up. That's lovely. So we could look to buy into the market once we have seen some kind of pullback before its next impulse taking itself higher. And then as soon as price approaches either the fib box or our POI here, we would then close positions and wait for some kind of confirmation that price is now ready to take a move lower. So looking at the most recent impulse that's been taken higher on the 1 hour time frame. Obviously, in order for us to get involved in those buy positions, first and foremost, we'd want to see a break of structure to the downside take place. As we can see, all these lows that have been created have in fact been protected. This is maybe our first sign of price moving lower. As we can see, we had a low set from this high. Price has come to set a lower high that has been broken now, so maybe this is a suggestion that price is in fact ready to take that nosedive lower before taking its next impulse higher into our point of interest or Fibonacci box. So we could zoom in, look for areas at which we can get in. Well, straight away I can see some inefficiency here, so we could highlight this, and as soon as the market opens on Monday, we can basically await for price to tap into this, and we can look to get involved. So I will be waiting patiently for price to tap into this point. If I just grab my path tool, price to tap in, and we can ride this fractal bearish retracement lower before price goes on to continue its bullish higher time frame retracement into our zone, where we can then look to sell longer term. So if you are looking to trade on Monday, keep your eyes on the USD CAD pair, keep an eye for this area here and for price to tap in, show signs of a move lower, and then we can look to get in and get out and take some profits. Okay, so finally moving over to the XAU USD pair, we can see here how price was moving bullish. We just zoom out, we'll see here how price was following clear bullish structure. This goes to show on the higher time frames and lower time frames. Now, looking at this market, we saw a break of structure in the higher time frame structures. We actually saw large structural lows being broken, which suggested bearishness longer term. Nevertheless, I am expecting price to trail back up into this point of interest before taking us lower. However, if price was to break this protected low here, this would invalidate this point of interest, and we can expect price to realistically continue moving down. So moving forward this week, this market is a bit unpredictable, and has been since all the things that are going on around the world, the fundamentals that have been taking place. As we know, gold is very much backed on fundamentals. Although technicals play a massive part in gold, I think fundamentals definitely overrule it. But nevertheless, I would like to see price trail up into this area, very similar to the previous two pairs that we've looked at, and then go on to take a bearish move lower. Again, how can we look to capitalize? Well, we can look to get in on those buy positions at the start of this week coming, and look to basically buy into this point of interest before placing those longer term sells. Now, it seems to me that it has grabbed anything remained in here, and we could be in the works of its next fractal impulse, taking its next high, but we'll just have to see what happens on Monday and try and find areas at which we can get involved. But yeah, short-term buy positions potentially, and then look to sell longer term once we have the right confirmation and confluence that backs our bias and analysis. So that does come to the end of my analysis. I hope you guys have enjoyed. I hope you guys have learned something from this, gained more of an insight onto what I'm looking to trade in the coming weeks. If you guys are unsure about anything that I've gone through in this video, by all means drop it in the comments. More than happy to reply to any comments that you have, anything you're unsure about, any concerns maybe. And if you're not involved, as I said earlier, get yourself involved in the Learning Lounge group chat. Last week, we provided 4 positions that all took profit in the Learning Lounge group chat, absolutely free of charge. We just wanted to kind of showcase the work that we are doing, and the quality that we are providing to our clients. So, as I say, get yourself involved. You'll see the 4 trades that we sent out. I'm going to put them on screen as well, just to show you guys. Anyway, with all that being said, thank you very much for watching, and we'll see you guys in the next Sunday Sessions video.